Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the 1 hour time frame, where we're looking for a bigger 3-wave corrective structure, after which we expect continuation to the upside. In this scenario, we have a 3-wave zigzag in wave W, looking for a complex structure in wave X, and then another wave Y to the downside. Currently, we are working on wave X. Inside wave X, we have a finished wave W being a zigzag, a finished wave X labeled as a internal flat, 3-wave A, 3-wave B, and a 5-wave C. And then inside wave Y, also looking for a flat structure in a wave A, 3-wave B, and then a 5-wave C to the upside. The most common target for your wave Y is between the 0.618 and the 1.236 trend-based fib extension taken from the low to the high of W to the low of wave X, giving you a target between 69.2k and 71.3k. After wave X and wave Y being finished, we then look for the green wave Y to the downside. Because wave W is already labeled as a zigzag, wave Y in a sideways WXY is not allowed to be a zigzag, so we would need to look for either a flat structure or a triangle inside wave Y, but a flat is more common. If we then zoom in to this wave Y here, we are looking for an expanding flat, which looks like this on the lower time frame. Here we have a wave A that is finished in blue, looking for a bigger 3-wave structure to the downside in B, and then a wave C towards the upside impulsively. The common target area for your wave B or your wave X is between the 618.886, 68.1k, 68.6k, and we're then looking for a wave B to the downside. Wave B has to be a 3-wave structure. It doesn't matter if it's an ABC or a WXY. The most common target for your wave B is between the 1.236 and the 1.38 Fibonacci, taken from the low to the high of this wave A, giving you a target between 66.8k and 66.5k, which is around that 886 here at 66.6k. The second bullish scenario, but does carry some lower probabilities, is a wave 1, 2 finish and continuation to the upside. First of all, this move over here to the upside counts not as nice as an impulse compared to this structure being an ABC. In an impulse, we actually still miss a wave 4 and a wave 5, because to finish wave 1 here, we count 1, 2, 3, 4, 5, but then inside this wave 3, preferably, we count an internal 1, 2, okay, we got that, 3, 4, 5, but we never really got a wave of 4, so it does lower the probabilities for this scenario automatically. And also, if we then count inside wave 2 a WXY with a flat in WX and then a zigzag structure in a wave Y is incredibly short in time compared to your wave W. Take a fib time from the start to the end of W to the end of your wave X, and wave Y here finished even before the 0.382, which is very rare. The common target though for your wave Y is the white box here, which at the moment is respected. The bearish scenario is a leading diagonal. If price moves to the downside, takes out the low, but does not find any support here and takes out the low at 66.2k, it increases the probabilities for the diagonal here, where we have a wave 1, 2, looking for a 3, 4, and a wave 5. Common target for your wave 3 is the green box 786886, trend-based fib extension taken from the start to the end of 1 to the end of wave 2, giving you a target between 66.1k and 65.5k. If price moves to the downside and hits the 1-to-1 trend-based fib extension at 64.9k, it will reduce the probabilities for this particular scenario, as preferably your wave 3 is shorter than your wave 1. After wave 3, we're looking for a wave 4 to the upside, a final wave 5. Both of these waves have to be zigzag family structures, and then after wave 5, we label it a wave A or a wave 1, look for a bigger 3-wave structure in B or 2, and then continuation to the downside in wave C or a wave 3. On the lower time frames, inside that green wave 3, we are then looking for a zigzag structure to the downside, or at least a zigzag family structure, because this is a WXY double zigzag with an ABCW corrective structure in X, and looking for another ABC down in a wave Y, where you at least want to take out the low at 66.2k. A common target for your wave Y is between the low here, 66.2k, and the 1.236 trend-based fib extension, with the trend-based fib extension taken from the start to the end of W to the end of wave X. If price can make it above the high here, 68.8k, the scenario is invalidated, but it has to move to the upside before taking out 67.1k. If you then look at the CVD divergences, then if we zoom out, you can see that we have lots of bullish CVD divergences on the higher time frames, but I do always prefer to look for CVD divergences very locally on a 50-minute and a 3-minute time frame. And we do here have also some bullish CVD divergences. This one already played out though, higher low here in price, lower low on the CVD, price moving to the upside, taking out the high, so that one has played out. And now with this pivot low here, we have a second CVD divergence, higher low in price, lower low on the CVD, which looks like this. So this is the 15-minute time frame, and here on blue we had a higher low in price, lower low on the CVD. That was your first bullish CVD divergence, and now we have a second one, higher low in price, lower low on yellow, as well as still on blue. Has to be said that a second CVD divergence does carry a little bit lower probabilities compared to a first divergence, so that is something that we have to keep in mind. And if we then look at the probabilities of the different scenarios, then on the 15-minute/1 hour time frame, the probabilities as it stand are higher for price to move below the low at 67.1k. For the bulls, it means that you want to see proof of support around the 886 at 66.6k to move up in an impulsive wave C. The bears want to see continuation to the downside and take out the low here at 66.2k. Probabilities will change, however, if price can find support locally and move to the upside, taking out 68.8k. If price can take out the high before taking out the low, it will add some probabilities to the bulls and a move towards the upside. If price can then also take out 70.6k here, then it adds even more probabilities. To the bulls. If price takes out 67.1k and then immediately moves back up to 68.8k without taking out the low here, it also increases probabilities for the more bullish scenarios. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.